Hey, welcome back to Two Stupid Guy Trade Stocks. I'm Dylan.
And I'm Vinny. And holy crap, for those of us that are Meta shareholders, it was a pretty wild week watching Meta stock drop like a rock after earnings. We're going to talk about the earnings report and what we're going to do about Meta stock going forward for us. Get to it.
Two Stupid Guys Trade Stocks.
Bam. I just want to take a moment to appreciate the fact that Meta is such a large company that when they have a bad earnings report, hundreds of billions of dollars evaporates from like their market cap, and that is larger than some companies' like gross domestic product.
Some countries. Yeah.
Yeah.
It's Google did the same thing in the opposite direction. It's pretty wild that these companies are essentially like making and losing the GDP of Greece just on like a daily. It's absolutely wild. But yeah,
It's
crazy.
absolutely bananas. The market did not appreciate the earnings report. Pretty steep sell off here in after hours. Saw like a little bit of a bounce back towards the end of the day. This was nowhere near like the lows that they had achieved. The Don't forget like where we are with Meta stock though, right? We were very fortunate to be able to buy shares not that long ago, sub $100, even like some shares below $80 a share, which is bananas. Right, so they've had a tremendous run since then. And whether or not it's deserved, we're going to talk about the numbers here. Maybe that gives a little inclination into that. So here's the headlines you were seeing when this first got reported, talking about how Zuckerberg was focusing on earnings calls on areas on where the company bleeds cash. He's not worried about the cash machine, and he's just once again distracted by these alternative realities and these little fancy little worlds that aren't even real, right? Like that's the headline, that's the narrative that's being pushed by like the investing media, if you will, right?
And to be clear, that's what you want. Mark Zuckerberg is, I said Zuckerberg. Oh my God. Mark Zuckerberg is still the visionary of the company. He's not a Tim Cook or whoever the newest Intel CEO
Yeah,
is, which probably is going to be replaced after what just happened to them,
yeah,
a garbage company.
yeah, exactly. He's not like a make the trains run on time kind of guy. This is just insane, though, right? You're talking about a company as large as Meta putting up a 27% revenue growth. Sorry, the actual cost of revenue went up 6%. Or I think it was 9%, but their expenses went up 6% year over year. Definitely, it's nice to see a company that is growing top line that aggressively while keeping costs under control. And when you do that effectively, look at these other numbers. Look how large this is: 91%, 117%. Because they're growing at the top very well and they're keeping costs under control, they're able to deliver massive results for shareholders. All right. That's why the stock has been up 400% since its low, because people saw finally that they were going to be able to turn the ship around and get this 91% income and operations growth. Like, that's insane,
It's
you
absolutely
know?
gross, especially for a company that has the opportunities of Meta,
Yeah.
where it could be, I've said this before, a Ready Player One status company, which is wild. That would be amazing.
Yeah. Absolutely amazing. So this is kind of like the headline or from their earnings report or the press release. 3.24 billion daily active users. All right, 7% growth year over year on a company that like it seems like everyone on earth must be involved in this company already. Right, 3.24 billion people. Bananas. All right.
It is, however, the people who are catfishing other people who have like 20 accounts are really floating that number, throwing them out there.
Yeah, probably. Like, how many princes can you actually have in like some of these countries? All right.
A lot.
They've been all emailing me, and I give them all money. Um, but ad impressions up 20% year over year, which is something we've been seeing them. Obviously more people are engaging the platform. You're getting more ads in your news feed. That's just how it goes. But this is a nice thing that's kind of turned around a little bit recently here. Average price per ad up 6%. So they were able to actually finally start charging more per ad, not just show more ads, which is nice. It shows that they're
Beautiful.
delivering value for the advertisers.
Absolutely gorgeous.
All right. As far as their costs, we talked about the 6% year over year, kept it well under control while still delivering this 27% year over year growth in revenue there. Capex, 6.72 billion. We're going to talk more about Capex here in a minute. Share repurchases, 14.6 billion. All right. They are giving back a lot of cash to investors. I think it was like 12.3 billion in free cash flow this quarter. So they actually depleted their balance sheet slightly. You're going to see here the cash and cash equivalent 58 billion. I want to say it was over 60 billion not that long ago. So they're sending money back to shareholders in order to reduce their balance sheet a little bit.
So,
Yeah, 12.5
question
billion in
about
free cash
that. They
flow.
had a free cash
Yeah,
flow of 12.5 billion. They had share repurchases of 14.6 billion, so they actually gave all that plus more back.
Yeah.
Usually, you would not do that when your stock is at an all-time high.
Yeah.
So would that be a hey, we know we can offer this may be a deal in 5 years? Let's buy some stock back now.
That's an interesting thought. They're definitely taking a gamble on that. I do
That's a
think
lot.
that I know, right? They're when you have this like kind of cash hoard on the balance sheet, if they can't use it to buy other companies, which obviously the U.S. regulatory environment's not going to allow them to do that, they can invest it internally to the best of their ability if they see opportunities, which they are doing through their capex. They did increase R&D 6%, I think it was year over year. However, giving that money back to shareholders is always a nice thing, and particularly share repurchases is my favorite way to do that. It's not great when the price of shares is high or all-time highs. However, if you compare it, we're going to look at the free cash flow yield. It's still actually a relatively attractive number in my stupid guy personal opinion, but we're going to get to that one in a couple of slides here. All right, this is one of the things that Wall Street did not like. All right, so they gave revenue guidance for next quarter. They give this range of 36.5 to 39 billion. The midpoint of that range is 37.75 billion, which would be about an 18% CAGR over last year. So 27% to 18%. That's definitely a deceleration quarter over quarter. However, it's still a massive number when you're talking about the growth of the business.
It's a $1 trillion company. That's disgusting.
Yeah, still growing at 18% per year. Yeah, right. Like when you compare it to the kind of other mega cap tech stocks, that's a pretty sizable number. All right.
That's gross.
They did increase their expense outlook slightly. They had previously given this range of 94 to 99. They bumped it up to 96 to 99, saying they're going to spend a little bit more. And they talked about the capex being this 35 to $40 billion range. Prior range was 30 to 37. So they did increase their capex expenditure for this year. They're heavily investing in AI infrastructure, which is, I guess, a good thing if you're an NVIDIA shareholder, because you're seeing all these large mega cap tech companies still buying a lot of GPUs for their data centers, and they're still investing in AI.
I think it's very, very smart. They're spending the money now while they have it so that they can benefit from it later. I know it's a little bit of a cliche, but this seems like a very well-oiled machine from the bottom line, losing 10% of people while having a 91% operating income. This is disgusting.
Yeah,
I don't understand
absolutely.
the stock move so far from what you said.
Yeah. I mean, it was just a matter of optimism. It's crazy how volatile Meta is compared to like other kind of large tech companies. It seems like they are extremely volatile, despite them being like a highly profitable business here. So revenue, back to the nice growth phase here. Remember, no one thought they would ever grow the revenue again after Apple put that app tracking transparency kind of change in.
Yep.
They've been able to weather that kind of storm and come out on the other side and grow revenue pretty substantially, which is awesome. Now, if we look at the kind of actual data here as far as like their revenue and their profits, if you're looking at the operating margin, the thing I wanted to highlight here is as we went through that phase where they had to go through the app tracking transparency changes, they definitely saw a decrease in their revenue or operating margin down to like 20% here. Right? They have now returned that, if you want to slide yourself over, back up to 40% into the high 30s, kind of back in that region where they historically used to kind of trend. So their year of efficiency has paid massive dividends in terms of their operating margin now going forward. They're a leaner company and they're able to invest more and give more back to shareholders at the same time, which is phenomenal. It's exactly what we want to see out of a company, right?
I looked up because I wanted the exact date of when when Apple did that to Facebook's ad business. So it was 2021. So they definitely had that dip of when they had like $86 a share. But I mean, the turnaround is crazy.
Yeah, that was only one of the issues at the time, right? It was more that this narrative about Zuckerberg being focused off in the world, where he's like doing whatever the hell ridiculous projects and doesn't actually care about the cash cows of Meta's business, which I think is a ridiculous narrative, and you're seeing it being repeated during this cycle here, which is nice. You might actually be able to get Meta shares at a decent price. This is another slide that I want to harken back with this year of efficiency here. Look at what they've been able to do as far as controlling their expenses. Right, they significantly slashed their expenses going forward, and they have it under control where they're getting these nice fat margins as far as their free cash flow, which allows them to buy back shares, pay dividends, and actually invest in R&D and AI infrastructure, which is exactly what you want a company to be doing right now.
Yeah, I don't want them to change their R&D budget though.
Yeah, R&D budget was up, I think, 6% year over year, if I'm
Okay,
mistaken.
good. I'm down
Um,
to spend the money.
yeah. So free cash flow, right? We had this quarter where they dipped down to like barely any positive free cash flow at all, and then they were hovering in this like mid-teen range for the most part. Now look at their free cash flow per quarter.
Killing it.
You know, $10+ billion per quarter in positive free cash flow, despite building out this massive AI infrastructure, and despite kind of basically investing in themselves with increasing R&D as well. So when we look at a free cash flow yield, this is where we are on Metastock. 1.1 trillion market cap as of close Friday, $58 billion in cash, $18.4 billion still in debt. They haven't been really paying it down. $39.6 billion net positive cash position gives you a $1.07 trillion enterprise value. They generated just short of $50 billion in trailing 12-month free cash flow. This is a 4.5% yield on a company that's growing 18%. Or
That's
expected
also
to grow
worth
18%.
1 trillion. That also
Yeah.
has the opportunity to be Ready Player One and be
Yeah.
crazy. That's the. I don't think people really understand. It's a long shot. I get it, but if they could master his entire VR fantasy, that's wild. That could be crazy.
Yeah, absolutely. So as we get into the conference call notes, you're going to get a little bit more of where are they headed, and this is kind of in the meat of what are they worried about as far as like investors, right? So they're scaling the AI services at a loss, right? This is what Meta does. Meta introduces new kind of software programs, new services within their family of apps that are scaled at a loss for a couple of years. That is how they
Mm-hmm.
do it. Actually, I think Zuckerberg even gives you like the timeline here. That's what their bread and butter is, and then they eventually turn that tap on and start cranking out the profits from it, and you see the actual revenue and ultimately like free cash flow and profit margin explode. That's what they do. That's how their business operates. Okay. So we'll continue to grow our investment envelope meaningfully before we make much revenue from some of these new products. And he even talked about how it's not just that they won't be generating revenue from these products. The Meta business model means that they will be actually probably cannibalizing other parts of their business to grow these new product streams. Right?
Mm-hmm.
Remember when Reels took away from like the actual Instagram stories?
Yeah,
Like that.
he's doing the same thing with Threads. He's like, after they got a ton of users, he's like, hey, this is like a 5-year thing. Let's just hold on. We're not going to make any money for a bit. I think it's great.
Yep. Exactly. They talked about Threads, same thing. They had like I think 150 million monthly active users now, which is interesting. I personally haven't really used it, but still early growth phase. Eventually, maybe it'll actually become revenue positive, which would be nice. So he said 30% of Facebook content is now AI recommended, and 50% on Instagram. And they're also kind of introducing some internal efficiencies in introducing this Meta Lattice. It's a unified ad targeting AI across all platforms. So it's going to allow you to have this one kind of algorithm that will allow you to assess the ads function and effective targeting across all their different family of apps products. So rather than having individual ones here and there, so this is going to get you efficiencies in terms of the actual production and management team of it eventually, and you're going to have a better product because you're going to be able to use this across all your different platforms. So you said, I want to say he threw a number out there about how like it using this has I want to say improved ad targeting on Facebook by like was like 6 or 10% or something like that. Like it is actually having a positive, meaningful impact already, like at this very early stage.
Okay.
Right? Now, this is from the CFO. We expect capex will continue to increase next year as we invest aggressively to support our ambitious AI research and product development efforts. Right. So this is another thing people aren't liking. Like, oh, like they're investing more in AI. Like it's so funny because like people will tell you like, oh, AI is the future. AI is the future, right? But then they're mad at a company like Meta for investing so heavily in it.
Yeah, it doesn't make any sense. I don't know if there's anything they could have done to avoid this. Happened to Nvidia a couple years ago, where they kept on having stellar quarter after stellar quarter, and then they still had an insane quarter and it dropped like 10%, which is exactly what happened here. Their stock went from 86 to 500 in a very short amount of time.
Yeah.
I don't know if
Yeah.
there's anything they could have done here, to be honest. These numbers are crazy.
I agree. So this is, I thought, an important quote from the conference call here. So we continue to see compelling investment opportunities to improve both our core business in the near term and capture significant longer-term opportunities in generative AI and reality labs. As we develop more advanced and compute-intensive recommendation models and scale capacity for our generative AI training and inference needs, We expect that having sufficient infrastructure capacity will be critical to realizing that many of these opportunities. As a result, we expect that we will be invest significantly more in infrastructure over the coming years. All right. So this is a multi-year build out of AI infrastructure. Right?
Yeah.
And Meta is on the cutting edge of it, and people are punishing them for it.
I don't know if I would have spent 14 billion in share buybacks and then also said this sentence. I might have done like 8 and then I don't
Fair.
know. That,
Fair.
something. Still crazy though.
Fair. But like back to your prior point though, is if Meta is the company that is building the AI generative like algorithm that is going to be the most profitable one in terms of ad targeting going forward, right? Like, 10 years from
Yeah.
now, would the shares not ultimately be extremely cheap right now?
So that's where I'm sure the comments are going to be. Are you buying
Yeah.
more, staying the same?
Me personally, I'm staying the same for right now. Okay. It is, but I am perfectly content to weather this storm. That's where I look at it from is, is this like a bad sign, a canary in a coal mine where it's like, now it's time to get the hell out? No, like, I think this is more of Meta being misunderstood, and I will continue to follow Meta stock. And if we see something where we get quarter after quarter where the stock sells off like it did back in 2022, 2022, then yeah, I would be a buyer of more at some point. What that number is, I'd have to calculate out a little bit more. Realistically, I calculate them at a 4.5% free cash flow yield in 12 months right now, below 5% for a company that actually has positive growth in the double digits. I think is a steal, in my stupid guy opinion.
Yeah. So I did not have many shares. I'm sure people have heard the story a million times. I sold a lot of like 300. Idiot. So I only had a couple grand in shares. I did double my position at when it was at $430. So I'm at like 15 shares, which is not it's not that many. I would like to have like 50. So I am hoping there's another drop coming in the general market overall. But I said earlier, I would rather have a negative year or two and then be very happy I did this 10 years from now than just sit and watch this stock. Like, I've already done that since $90.
Yeah, I mean, I completely agree. I am really, really enthusiastic about what I'm hearing from them, and I'm optimistic that they'll be able to deliver massive financial results for shareholders in the future. And I am perfectly willing to weather the storm in the interim, and even buy more if the stock drops meaningfully lower than it is right now.
All right. Well, guys, let us know what you think.
Okay, thanks, one.